90% of the listing agents have zero idea how to read a mortgage approval. Pre-qualified, pre-approved, fully underwritten. So I've seen it come through fully underwritten and you get this sloppy pre-approvals. They also are probably telling the buyers, oh, it's okay. It's fully underwritten. Don't worry about it.
You get fined if you don't have a buyer. Because I joined some group or something and they keep saying that they got fined because they didn't have a buyer broker. They took a friend to a showing.
Fined by who?
By the realtor organization they're in. Does that really happen? I've never been part of a realtor organization.
Not that I'm aware of, and they have to answer for themselves, but let's put it this way, it's a state law. So the only ones who can enforce things are the state.
Wow.
But the realtor association, you don't have a signed buyer broker. And the buyer broker agreement is only for being able to write a contract, not being able to just show a property in California. The open house, it's an open house. How come you have big signs out on the 405 to come to your open house? Well, they're not going to have a signed buyer broker agreement. The hell,
we're in the thick of it on fixed real estate.
And remember this, Hells Angels do not have a buyer broker agreement when 20 motorcycles show up at your house for the open house because they saw the sign on the 405.
Just tuned in. We are in the thick of a heated discussion that stemmed from our pre-talk on This Week in Reddit. The person asked, you're paying your buyer broker fee in the price of the higher mortgage amount. This is why big brokerage and realtors got the $1.6 billion judgment. But then someone asked a very interesting question. It says, you need to find a buyer agent as part of the settlement because no buyer's agent can even show you a home without a signed agreement. And you responded to elegant_highway 7095.
Yes, I did. And let's talk just California.
Mm-hmm.
You do not need to have a buyer broker agreement or any kind of one-day buyer broker agreement with the listing agent, anything like that to see a house. If anybody wants you to sign anything going to an open house, no. And they should know better. But they're going to say, well, the seller wants to see who came to the house. But here's what they're also doing. They're also trying to get your name in case you buy the place within 60 days after their listing expires because you attracted that buyer. That's really what they're trying to do, because in the listing contract, it says anybody who you procured for the next 60 days after the contract expires is still the client of you should get paid.
Mm-hmm.
So that's another reason. But you know what? Too bad. You only want to worry about people actually going to put in offers. If somebody comes, it's ridiculously unusual for somebody to see a house and then come back 4 months later. So, I really want this house and no other house. But no need to sign anything. You sign a buyer broker contract because you're submitting an offer. Now you can sign it ahead of time so everybody knows what you're getting paid, which is the best thing to do. We try to do that in the very beginning. Here's everything. Our people are only paying $97.50, so it's prefabbed to our prior broker fee.
Mm-hmm.
And that way everybody knows what's going on, and I explain what happens if there's more buyer broker fee. How about this? New construction, and you're not going to know this as a human being buyer. They send out emails to agents telling them how much buyer broker fee they're offering. So I got one the other day from a company that said, hey, we'll pay you 2.5% on the first buyer you bring in, 3% on the second buyer. Well, the idea they don't understand is you have a contract. These agents have a contract with the buyers. What if they're all 1.5%? What are you doing with the extra money? Are you giving it back to the buyer? Is the agent trying to get a new buyer broker contract for the higher amount? Be careful out there. Ask, when you're in a new construction site and you're with your broker or anything, somebody ask, are you paying the buyer broker? Because you don't know. They don't volunteer that information, but they're trying to get brokers to bring in people. So they throw out these big numbers like it was pre-NAR settlement.
Actually,
not
sales levels too. You get 2.5 for the first, 3 for the second. If you bring in a 6-pack of people, or do they even give more?
probably you can negotiate more. So what that tells you also, all that is built into the price of the house. It's like, if you don't want to have a real estate agent, you want to buy new construction, go in and you want 2% or 3%, you ask them what they're paying a buyer broker, you want that off the price, or you want that given to you as a concession. Because you don't have a buyer broker and they're just smiling because they don't have to pay it. So there's another.
Did they ever do that? In your experience?
I don't know. I've only represented people in new construction, but try it. There you go. Here's a way to save 2 to 3% on buying new construction. That's the headline right there. Go in without a buyer broker, because you know what? Also, those contracts are sealed with a kiss. You can't change them. You know, you can read it, you can go through it. It's lawyered up to death. They're going to try to get you to spend a lot of money on options because that's where they really make money. They're going to force you to use their mortgage company in order to get, $10,000 credit towards whatever, or furniture. And the title, use their title company, because it's next to impossible to go to another title company because they have so much documentation. That's kind of fine because it's all the same price, but beat up. If it's a separate escrow, I don't think they use escrow companies. They just use straight title because it's just easier. Every state's going to be a little bit different, but beat them up.
That is interesting. And this is exclusive to new construction because there's not a whole lot of.
Yes, this is new construction I'm talking about. So again, you take your contracts, throw it into ChatGPT. That might be enough to tell you what to look out for. And not really need an agent to go to new construction. People we usually get who want us to help them with new construction love it in that they're getting a rebate from us. We're helping them, and there's certain things that we're advising them on it, but it's not like it's a regular deal that's not new construction and we have to work every little piece and every little paragraph. With the new construction, it's basically done. So we get our 9750 and then we give them the rest. I just sent 50 grand to somebody a couple of weeks ago for a Toll Brothers deal. I think I talked to them twice, registered them, waited a year until it closed, and then here's my money, here's your money.
That's amazing.
Toll never knew anything.
So those sales goals actually work in the flat fee model, because the more houses you sell in that Toll Brothers or whatever, suddenly your buyer broker fees up to like 4%, and
that's fine. And I'm rebating it back
rebating it right back to the buyer.
Exactly. So it's either one of two things here. You come to us to get the rebate, or do it yourself and literally ask for that credit towards something. They'll give it to you.
And in new construction, you can't really negotiate the price of the home.
Usually not. That's their foundation is the list price. Yeah, so that's the way to do it. Now they'll say to you, "Oh, well, you didn't come with a buyer broker, so you're not eligible for this." They'll say, "See ya, I'm going down the street. I'll remember to get a buyer broker first to come in so I can get the rebate." And then they'll homina, maybe you back. That's a reference from the 50s and 60s anyway. You just have to see and play with them. They're salespeople. They're going to have to go to the head of sales. It goes to some corporate guy, and but play them out.
Now, for all the people that are not buying new homes, you got to be prepared. And we've talked about this a lot on the show. Fully underwritten, pre-approved. We are going to break that down completely today.
Okay,
so questions unsolved, or that is.
Here we go. I got a contract today on a property, one of our listings, with just a typed letter on stationery. And the guy did not say he was a mortgage banker or a mortgage broker, but I found out he's a mortgage broker because I went and checked his NMLS number in the NMLS consumer thing. By the way, you can check on any mortgage person. Just Google NMLS consumer, National Mortgage Licensing System, consumer, and you can check by their name, by their company, by their NMLS number. Anyway, so he's a mortgage broker. So think about it. If I'm a broker, I can't guarantee to anyone that I'm going to be able to fund their loan, that they have a commitment. So as a broker, I have to go to an actual lender. That lender has one person, not one particular person, one category of person who can approve the loan, and then the company is bound to guarantee the funding of that loan. And that's called the underwriter. Okay. So what we do is we take your application, we clean it up, make sure you got all the documents, get all the paperwork from you, upload it to the lender that we use, and ask them for a fully underwritten mortgage pre-approval. So what happens is they run a full credit report, a real credit report, which is going to ding your credit 3 to 5 points. But what else do you need credit for right now? You're buying a house. So ignore the fact your credit score went down. It's going to come back. Everybody freaks out about that. Don't worry about it. It comes back and you have to do it. They then run your entire digital file and that credit report through either one of two places, Fannie Mae or Freddie Mac. Fannie Mae's system is called Desktop Originator, Desktop Underwriter, depending on who's using it. And Freddie Mac's is LP, Loan Prospector. And I used to be on the Loan Prospector Advisory Committee years ago. So I got into the back end with people. I mean, I know what it does. So what that does is if you're within conforming limits, which is not a jumbo loan, it'll approve the loan. I'll say accept eligible. Accept means it approves the loan. Eligible says it's eligible to sell to Fannie Mae. If we have a jumbo, we can still run it through there. It says accept ineligible, and the ineligible only means it's a jumbo and they won't buy the loan. But this way, so at that point, you have generically a pre-approval. That's what a pre-approval is. Done. Nothing else. Fannie says, okay, we'll take it. But what you need to do, and what will happen after you get under contract or before, because you have to do this anyway, is an underwriter will then step into that file and look at your income, assets, credit, everything, and make sure that all the numbers that you've told them are correct. If you claim you make, what happens is people think they make more money than they really do. Overtime and bonuses are usually, I just got overtime. I just 10 hours a week. It started 3 weeks ago. And you think you can count it on your mortgage. And that's why you're going for that new house. Well, guess what? They can't count it. They need a history. Usually 2 years, and then they average it. Overtime, bonuses. So little things like that. RSUs, restricted stock units. That's a whole mess on how long you have to have them for Fannie Mae. So you don't know if that's right. Your assets, if you have deposits other than your pay stub, you're going to have to verify where that money came from, and it better be an acceptable source. There's 50 million other little things that an underwriter does. Actually, through a company called Provident Funding, I got trained as an underwriter. So I know these things backwards. It says audit trail. If you're an accountant, you know what that is. If you own a business that's been audited, you know what that is. It goes through every little last piece of paper and make sure that it works. So with a fully underwritten pre-approval, the underwriter goes through it piece by piece and makes sure it's okay. They pretend there's a contract. So they issue the approval subject to an acceptable contract with acceptable numbers on there, and the appraisal, and the clear title report, which is, and insurance, 4 things. So as long as you get those 4 things and they're all right, boom, you go to closing. Now, if you come to me with a piece of paper like this guy did, and he says, we have our client pre-approved, and we went through the income, assets, and credit, we underwrote them, which means the mortgage bank broker underwrote them. Can the mortgage broker guarantee funding as a commitment to lend? 3 most important things in a fully underwritten pre-approval. Commitment to lend. And obviously, he did not. So I sent it back to him and I said, nice piece of paper, but you're a broker. I need to see the approval from your lender. And I said to him, I use Rocket, I use this one. I get an actual physical commitment that I give to agents because I don't care that my name's not on it. What do I care? I don't know. He thinks, I can approve loans. Well, no, you can't approve loans, dude. And then he starts saying to me, oh, you're insulting me. And I said, dude, been in lending since Reagan was president. Okay. So take a look at your calendar and see when that was. I think I know what I'm doing. I send them out to Rocket and other people. They give us fully underwritten. I need to see fully underwritten. What does he send back to me? He sends back the Fannie Mae DU, Okay. But he literally crosses out the ratios, how much assets they have, where they work, because they're submitting an offer and they're trying to say, well, that's all they qualify for, which I know is complete, utter boulder. Okay. Because we're going to counter them at a higher price anyway. And then I'm going to ask him to reproduce his approval. He also gave me the approval from this company called UWM, United Wholesale Mortgage, one of the top lenders in the country. They only use brokers. They're so weird. They say, if you use Rocket, you can't use us, because them and Rocket are like vile enemies. I don't care. United Wholesale Mortgage, I know for a fact, does not issue fully underwritten mortgage pre-approvals. And it said that right on their approval. It's still subject to review by an underwriter. And it's like, no, I caught you. You were both the agent and the mortgage broker were trying to lie. But let me explain this. This is the most important thing. 90% of the listing agents have zero idea how to read a mortgage approval. They'll say, these guys can, and you have to put it on the California contract. This happened to be Washington, so it wasn't on there. Pre-qualified, pre-approved, fully underwritten. So I've seen it come through fully underwritten, and you get this sloppy pre-approvals like this. And, they also are probably telling the buyers, oh, it's okay. It's fully underwritten. Don't worry about it. And, sometimes they waive the mortgage contingency, and that's really stupid. In this case, they had a 21-day mortgage contingency, but a 18-day closing. Oh, and also this agent forgot to put her commission on it. So I wish it was a perfect contract where she missed her commission so we could have signed it, but she figured it out on the second round. So we're still futzing with it, but really the bottom line is the fully underwritten is something you have to go through anyway. So do it in advance, get everything out of the way. You're probably able to get a house cheaper if you waive the mortgage contingency in some circumstances, because you're all done. Because it doesn't matter. You're done.
That brings up a couple questions.
Yes.
Couple questions. So one, the risk. So this buyer agent is putting his clients at a risk, saying that or the mortgage guy says, oh yeah, you can get the loan. And they're going to submit an offer, but there's a chance the client thinks that they can get that loan, but they can't. So they're at risk.
They're at risk only if the mortgage contingency is waived.
But if they can't get the mortgage in 18 days, because
we're changing it down to 7 because 18 is ridiculous. I mean, and nobody was thinking, nobody reread what they wrote. So they have any logic to it. So we're going back with logical conditions.
Two questions. So the mortgage pre-approval, if someone just gets that generic one, the big risk is that they can't actually get a mortgage.
The risk, yeah, but that's why you put a mortgage contingency.
That's why you have the mortgage contingency, but
right.
There's still that little bit of risk that you may not get it. Now, if you go through the fully underwritten pre-approval, does this shorten the timeline and the amount of legwork you need to do once you actually go through the official mortgage process because you've already done it?
Exactly.
You have to do it twice.
No, here's what happens. Like I mentioned, you got to get an appraisal done. You got to submit the agreement of sale. You got to get a title report, and you got to get insurance. So you do those things. The only other thing that you would go through normally, let's say you got a fully underwritten pre-approval, got it last week, you went under contract today. The only other thing is your escrow deposit money has to be trailed. So we need a copy of the canceled check or the wire receipt. We're going to compare that with what the escrow company or title company gets as the receipt that they get for the wire. But basically, that's about it. Jen, can you think of anything else?
It just depends when you got the underwritten pre-approval, because you need a pay stub within the last 30 days. And if you've gotten another bank statement, just you have to keep all of your papers up to date throughout the process.
Yes.
It's easy to do.
If it's been longer.
From zero.
Example I went through was like last week, you got the approval. But if it's 2 months ago, yeah, you got it. That's it, though. If nothing's changed, then don't worry about it. If you got a new job making 200,000 less, yeah, maybe you worry about it. Mm-hmm. So let your lender know when you have changes.
Now, once you're fully underwritten, that's just for one particular mortgage company.
Right.
So if you want to go to try a different outfit, you're gonna have to go through that doesn't transfer. You can't just shop around the mortgage.
Correct.
The application doesn't, but they all are looking around. If they're fully underwriting that approval, they're all looking at the same stuff. So you don't need to get 5 different fully underwritten approvals.
Right. So if you're a jumbo, you go to Wells, City's going to have basically the same underwriting. I mean, there's little things like City does something interesting. They'll let you take on jumbo money directly from your business without getting a letter from the accountant saying that it's okay to do that. Whereas Wells or Normal or Fannie Mae, if you take money directly out of your business to buy the property, your accountant has to say that the money you've taken out of that account won't affect your business operations. And most accountants are kind of scared to write that for liability purposes. So there's a minutia thing. The mortgage companies are full of minutia.
Mm-hmm.
The rules are full of minutia. Hey, you're dealing with a lender, maybe even ask them for their guidelines. They'll share them. They got nothing to lose.
Mm-hmm.
And throw it in ChatGPT with your mortgage application and all your documents and say, will this meet the criteria?
Mm-hmm.
I mean, what we're going to do, and we talked about this a little, is literally get every one of our lenders and every one of their guidelines, including the subprime, non-QM crap and bank statement stuff. We're going to put that into the website.
Jen, you might be answering this question. The question came up in one of our Slack channels. Someone asked the question, is it easier to get a condo with an FHA mortgage?
No, it's not. It depends on how the HOA is running the condo.
Well, here's the thing, Jen, you might not even realize this. With a conventional mortgage, you can get what they call a spot approval. So if you want to buy unit 208 and the building's not approved as a Fannie Mae approved building, Fannie Mae will say, okay, if you meet this criteria, all the crap Jen was talking about, then we'll buy the loan. FHA says you have to get the entire building approved and then we'll buy the loan. They used to do what they call spot approvals, but they don't do them anymore. That's the big difference. Same with VA. The whole building's got to be approved. So
that means the balcony has to be fixed even if you don't have a balcony.
Always. Yes. Always. Yeah, but they got to meet the criteria, number of investors, reserves, blah, blah, blah.
There's also, we've had problems where there's like litigation that has prevented a loan from closing because of the condo litigation that's going on.
Yeah, like it's been going on for 5 years and they're suing a developer to make repairs. Well, I've seen lenders say, no, I'm not going to do that because I know there's repairs to be made. So we're worried about the property if the guy ever does the repairs. Number one question in a condo building, is there any litigation? Anywhere, plaintiff or defendant. Because sometimes it actually matters. I know it's crazy, but is what
the listing agent has to disclose all the litigation, or do they have to be asked in order for them to disclose it?
Some of them don't know.
Yeah. So that's why every deal you contact the HOA to get all the documents. Either the listing agent does it up front or, for the people who still do it the way it shouldn't be done, once you get under contract, then you get everything from the association, which is just stupid. Get it ahead of time.
Yeah, it seems like that's stuff you'd want to know before you even consider making an offer.
That's very Southern California listing agents. They are the worst. They do no disclosures, no inspections, no documents, nothing. They say, you sign a contract and then we'll give you the stuff. And then you get out of the deal. Yes. That's why we're putting a big push on listings in Southern California, because we're going to save people time and money because you're not going to have a second round of negotiation. The inspections are already going to be done. All the disclosures are there. It's done and over with. And you come in with a fully underwritten pre-approval. We got everything waived. You get it closed in 14 days. The other thing is, and I've talked about this a million times, when you go and you talk to your Coldwell Banker Compass agent in Southern California and you trust them, and they said, well, we'll order the escrow and title and don't worry about it. Well, they order the escrow from whoever they want to, and these escrow companies charge per 1,000 of the transaction. The escrow company does exactly the same thing, no matter if it's $1 or $10 million, exactly the same process. Why are they charging you per thousand? We use Fidelity National, big ass national company. They do combined escrow and title. So really I'm dealing with a title agent who does the escrow work. Mm-hmm. So they're actually more trained, they're more professional, they're better. And so they charge a fee like anywhere from $1,500 to $2,000. Mm-hmm. Whereas you have, if you go to somebody who charges $2 per thousand, a $2 million deal, it's $4,000. I mean, why? And it's $4,000 for each side in LA County and Orange County because they split it 50-50. It's monumentally stupid and expensive. And that just tells you that the listing agent doesn't give a damn about you.
A lot of the time, the listing agents they're an affiliated business with the escrow. The companies are affiliated.
Yes.
And they want you to sign that disclosure.
Right. And they do it after you sign a contract. And in the contract, it says what escrow company you're using. They then send you the disclosure. Oh, by the way, we're Keller Williams. We own that escrow company. I mean,
so you can own a realty company, can own an escrow company too.
Absolutely.
It can be a complete monopoly.
Yep. We had one at Keller Williams in Beverly Hills. They were charging like $4 per thousand, some insane number, because that's where they make their money.
Mm-hmm.
So they can pay their agents 90% instead of 80%. They're going to make it by forcing them to use their escrow company.
Mm.
And half my life with these buyer broker deals in Southern California is fighting with the escrow companies. I have a standard thing from ChatGPT to send to them and scares the living hell out of them. And they acquiesce. I've had a couple of escrow companies just say, we're not going to do it. And you got to change escrow companies. I love those because those escrow people go out of their minds trying to facilitate, why you should use them. And it's just like, no, nothing's making sense. So the old guard of escrow companies is coming down. People, doesn't matter where you are in the state of California, use a combined title escrow. It's going to be cheaper, better, more technical. Fidelity's got a great back end system. Here's a great example. All these escrow companies in Southern Cal, we'll get an email the day the agent tells them we're under contract. Oh, please, what's your client's email and their names and their phone number so we can call them to give them our wiring instructions? It's like, no. The way Fidelity does it is we get their phone number, they're sent a link, they go into a secure link that's inside the Fidelity system where they then put their wire information. So nobody talks about it over the phone. No email is exchanged. It is buried behind firewalls, and your stuff is a hell of a lot safer. And these title companies do some serious work on, preventing anything from happening. It's a much better way of doing it. I mean, I do it. I use a bank called Mercury Bank, and when I have to have people send money or I send them money, I just send it's an email that sends to them that they go into Mercury system and put in their bank information. I never want to know it. I don't care. What do I need it for? Mm-hmm. What do I need to write it down and then copy it? I mean, so I can go on about these escrow companies and just why there's 5 people on every email for an escrow company. It boggles my mind too. So I'm sorry to be in the 21st century, but the calendar says it's 2025. It's not 1997, and just people don't want to change. But it's time to change, people. We're coming for you, Southern California.
Now, line of demarcation, do you consider Southern California like Thousand Oaks down, or?
Who the hell knows? I don't care. It's Santa Barbara. What is that? It's kind of, I guess Santa Barbara County is kind of the beginning, Tijuana of what I'll call Southern California. And then once you get Gilroy and above is Northern California, and everything in the middle of that is Central.
Central, like San Luis Obispo.
Yeah, for sure. That's the capital of the Central.
If you ever want to live in California and surf in California, it's an endless debate on where Southern California ends and Central California starts.
But kind of more important is East and West California, I think. Because you got the mountains, and everything to the east of the mountains has nothing to do with what's on the west of the mountains, except maybe Palm Springs. That's about it. Everything else is completely different farmland, and then you got Northern California where they just grow.
For surfers, the debate usually is San Francisco south is Central California, all the way down to.
Because isn't it the same type of surf?
It's the same type of surf. You'll go
right
Santa Cruz down to Central Coast, San Luis Obispo. Anything lower than that's going to be Southern California, and then anything north of San Francisco is Northern California.
Of course, yeah, because Santa Barbara, Ventura is different, and then you hit Malibu, and Malibu is kind of turned the other way, so it's really a southern exposure, so it's different.
Just think about how happy the surfers look in Southern California. Then you get like the Santa Barbara surfers. By the time you get up to San Francisco, they're starting to look pretty burly.
The Santa Cruz stuff is for lunatics. Okay, let's just state that right here. If you're new to surfing, do not go to Santa Cruz.
Yeah,
for any reason. Just Google it. You'll see
why.
Hang
out at Cal's with 100 longboarders, but don't paddle out at steamers.
No. Today I heard it was a little ugly. Getting out there, there were some rough seas out there in LA.
Oh, we had a good swell going today.
Yeah,
not that
but there's some warning, that comes up on the phone. Don't go out in the water. You're out of your mind. Blah blah blah. So, anyway,
there we have it.
There's the California surf report.
And the surf report didn't do any food recommendations this podcast, but we did got a couple surf tips.
There you go. Dan, have you ever surfed?
No, it just seems so like, I don't think I have the upper body strength to paddle out. That's what it looks like. It's so hard.
It is.
I've seen people, I watched my friends surf. And I'm like, I know it's not for me.
Well, they have these man-made surf places now. They have one in Palm Springs. Yeah. Where you go there and you buy a period of time, I guess. And there's different wave sizes and different waves. And they can change which way it's a right or a left and height. It's Kelly Slater, I think.
So the guy that's doing the Palm Spring ones, he's with the Rady family. Kelly Slater's up in Lemoore, and he's done one in Dubai.
Oh, right.
That's
Dubai.
Kelly Slater wave pool. And then they're building an Olympic wave training facility in Oceanside now.
Nice.
Right by the airport in Oceanside. But yeah, you can definitely learn in a pool. And then you've got Waco. The Waco wave pool is pretty popular.
Yeah. Yeah. Plenty of surfing stuff here. And we're going to have the Olympics 28, right? Yeah, 28. They're going to be somewhere near you.
I think the swim is out near me at the Rose Bowl, right?
Right. That pool is amazing in Pasadena.
Yeah.
Yeah, that pool in Pasadena. I was just there a few weeks ago. It is. If you ever want to train and do laps, it's just the best.
Can you just go, or you have to?
Yeah, you pay like $15 or $17 or something. They got locker rooms. They got a good little cafe there. I can't remember what I had, but it was pretty good. And it's watermelon water. Yeah.
Okay, well, we got some food in there too. That must mean we reached the end of this episode.
There you go. That's fun. Be careful with them pre-approvals, people, and especially agents. Hey, if you're an agent and you don't know what you're looking at, call me, ping me. I'll be happy to look at what it is you got as a listing agent, because you don't want to screw your clients. If you don't know, you don't know. So
if you've got a question, tag Arrivva on Reddit and Fred will answer it personally.
Yes. Got a bee flying here. Okay, let's get out of here.
You got to go protect yourself. Stay safe.
It's enough aggravation. Bye.